Hello, everybody. Welcome to our session today, Data at the Core, Empowering Insurers. My name's Jim Erickson. I am a market research analyst and a former editorial director working with publications like Digital Insurance. I founded Information Management. Really excited to be here today and host this session with three great panelists. You heard the intro there. If you have any questions for technical reasons, just feel free to enter them in the chat there, and our producer will get right back to you. So I'm going to get us started today. We're going to have one quick poll and a little time for Q&A at the end. So please get ready with your questions, if you would. So to enter into our discussion today, the insurance industry is undergoing a transformation, and insurers are understanding the need to leverage all the data at their disposal, not just during moments of premium payments or when customers reach out. And in this webinar today, we're going to explore how leveraging data can improve customer engagement and process optimization. We will discuss how insurers can use data to gain important insights into customer preferences, behaviors, and risks. We'll also provide some advice for executing and personalizing data usage, as well as some strategies for overcoming common challenges. Today, we're joined by a really great panel. You can see the pictures on the screen there. You'll see them in person momentarily here, or you can on the side already, maybe, I'm not sure. But these are some real boots on the ground folks with some knowledge and experience about how data is transforming the industry. We have Mercedes Concepcion Gray, who is the Industry Chief Strategy and Transformation Leader at NTT Data Services, global insurance digital platform. Dror Katsov, who is the co-founder and CEO of Attidot, and Mike Hicks, who is the CIO of Jackson Financial. I want to mention this session today is sponsored by NTT Data and is being hosted by Digital Insurance. So thank you all for joining us, and we look forward to a great discussion today. And before we get started, I'm going to throw one little poll at you here. If you could please take a moment to answer what you see on your screen and help us set some context and add to our discussion today. What is the top priority insurers are focused on right now? So is it understanding how AI will reshape claims, distribution, and underwriting, exploring the increase in data from connected devices and understanding how this will shape customer expectations, new products and channels? C, is it leveraging interconnected ecosystems and partnerships? Or D, keeping up with emerging risks and regulations? So if you can answer by selecting one of those and hitting the submit button, we will talk about those results in the context of our discussion. And as our discussion proceeds, we'll keep all that in mind. So I'm going to give you just a couple more seconds to answer that and hit the submit button, and remind you that we are recording the session today. We'll provide a playback of it to you as soon as it's available. And again, I'm taking notes here, so I hope you will use this opportunity also to engage with our panelists and and be part of the conversation today, which we hope will be a dynamic one. So again, great speakers today. I'm going to get things started by studying a little bit about the current landscape, and then we're going to launch into our discussion. The insurance industry is on the brink of a shift driven by the increasing prevalence of data and AI. We all have been hearing about that a lot. The volume and variety of connected devices is expected to reach 1 trillion by 2025, allowing carriers to understand their customers more deeply, leading to new product categories, personalized pricing, increasingly real-time service delivery. Robotics and additive manufacturing will revolutionize commercial insurance products, of course. Open source protocols and data ecosystems will ensure that data can be shared and used across industries. Advances in cognitive technologies, such as convolutional neural networks, will allow carriers to process the large and complex data streams generated by active insurance products. All these trends are preparing the industry for a future in which customer experience is faster, policies are purchased almost instantaneously, and advanced analytics enable more personalized products. So with all those words said, let's get going with our panel today. We'll start with a little context. And so I'm going to start with a question for a couple of our panelists and follow up by whoever wants to chime in. You can make it a jump ball after the first couple of responses. Let's start with some context. So what advancements have you seen in the insurance industry over the last 3 years that have had an impact on customer experience, technology, or other aspects of the industry? And I'm going to start with Mike and ask him to kick off our conversation today.
No, thank you, and thanks for having me. So there are a couple of advances that come to mind over the past couple of years. First, I think customer experience or CX, and omni-channel engagement, and we're all talking omni-channel these days, really is really driving a change in both marketing and customer service, and it's really shifted, from from theory into practice. I think the primary driver, to be honest, over the past couple of years was through the pandemic. There was an acceleration in consumer shifts towards digital channels of engagement. I think it became the new norm because it became the only way consumers, when they were working from home or in lockdown, could engage in many ways. And I would argue that during that 2-year time frame, the digital roadmap for the industry fast forwarded by 5 years, and I think we're starting to see that shift taking place in our industry. I think there's a combination of things, predominantly massive data sets and AI innovation that's now allowing any company to predict customer behavior, provide a channel of choice, and really drive towards the best outcome for both sale and customer service. So, we're starting to see that taking hold, and that shift is happening in a significant way. And it's also now possible to influence customer behavior. We see that a lot in social media, but behavioral analytics, really driving what I call digital nudges to drive engagement to the channel of choice is becoming the new norm. We've seen CX become mainstream within the industry. Predominantly, companies are using personas, journey maps, and thinking and creating customer-centric products and services. But as you think about that holistically, we're also seeing shifts in analytics and AI changing how we're transforming underwriting and claims, and really across all lines of business, predominantly for efficiency and accuracy, but also driving back to those consumer expectations. We're seeing predictive analytics now regularly being used in underwriting for simple insurance. And there's a concept that it really is coming to the forefront around AI co-pilots being used for complex policies to help underwriters better understand risk and drive more profitable and faster decisions. But the progress really has been significant, and I think we're only seeing the beginning of what is yet to come.
Yeah, that all sounds familiar to me. And the beginning of the next era moving forward, we focus so much on digital transformation and stuff and core systems in the past. And some folks are on different journeys, but all those things you mentioned sound relevant. Mercedes, what is the view from NTT and your experience with customers?
Well, I think Mike really summarized it quite well, right? The pandemic really accelerated. And today, really, if you're not having omni-channel communications and meeting your customer where they want to be met, those are really table stakes today. And I believe that over the last 3 years, that has been a big part of the advancement in the industry, right? It's all about making sure that you're able to meet your customer in the way that they want to interact with you, right? They have to have that choice. In the technologies in the advancement today, also data, and I know we'll get more deeper into that's a big component. I still think we're at the beginnings of the disruption that's going to create as it relates to being able to hyper-personalize and really proactively use data. But I think that the ability to be able to enhance, and when we think about, personas and the journey of the personas and the different entities that really play, it's not only the external entities, the policyholder, the agents, the owner, they're all pretty standard entities, but it's also the internal entities, the employee experience as it relates to how they facilitate their work and the ease of use and in the simplification of interaction. And obviously, as we really go into the next 3 years, the acceleration of that interaction. The patience, I believe, of consumers and the patience of learning. I think one key area that's interesting to me, that's an area that I think it's at its beginning, but it's really an area of excitement is what Mike mentioned about personalization of products. That's really a very interesting area, and I think an emerging trend that it's going to continue.
Sure. It all sounds familiar too. Those great answers. Okay. We're going to keep going. I'll move into our next topical area, and a reminder to our panelists that I'm going to throw these questions at a couple of you, but anybody's welcome to chime in or jump back in if they have a further comment. Feel free to interrupt me as we go. So we started out with a little context. Let's move on to some priorities now. And I'm going to sort of use a similar lineup here. How do you see insurers shifting their priorities to keep up with the changing landscape? So what kind of prioritization changes are happening inside the insurers? And maybe Mercedes, from your perch at NTT, what do you think are the priorities there?
Well, I believe, and from what we're seeing in the industry, one of the top priorities is how do you harness data and change data from being a passive repository to being proactive, and kind of solving the challenges of all the disjointed and data that's really that there's a wealth of data that exists within an insurance company. It's disjointed, because of the legacy environments. It's not always proactive, but creating that truly view of 360 of data and bringing the data to the front. And when I say bringing the data to the front, it's all about how I then leverage that data to create proactive experiences with my customer and really drive more of the industry. I think up to now has been more of a pull. I called you, you give me information, right? We haven't harnessed the value of being able to understand that the status of a person change, and therefore I can generate leads. And I'm able to say, well, this person bought a term policy for me that was $50,000 when they were out of college, but now I know that they bought a bigger house and a bigger house and a bigger house, right? How do I generate those leads? So I think, to me, the key theme is turning data into proactive actions. And that leads really, it's the customer experience, which really is a trend that needs to continue. It already has been accelerated somewhat, but really taking that in the decisioning process, in the underwriting, and accelerating the claims experience, and being able to then also leverage that for the risk assessment, being able to optimize your distribution channels. And this is an area where Dror Formati, that I know has a lot of experience with all of this, but making that data proactive and making sure that you bring all that, both internal data knowledge as well as surrounded with external insights of that customer, of that agent, and being able to really make that seamless. I think the other key trend and the other key area is also leveraging that for the optimization of processes. A big part of the customer experience is if I interact with you, if I call you, and then I have to wait 5 days and not know where my request is, and I actually have to call you back to tell you what it is, versus proactively me letting you know, hey, you're in step 2, you're in step 3. And ultimate the vision is to be able to really make that so it doesn't have to have a lock time. So those I think data is really where I foresee a big part of the disruption and the changes to occur in the future.
Right. And Mike at Jackson Financial, I know you have your own focus there, but you could talk generally or specifically what you're seeing in terms of priorities to keep up with the landscape.
Yeah, I would say that, and first of all, Mercedes, I think covered all of the key bases, but yeah, I would say that ChatGPT has become, a topic not only in the boardroom, but across the organization. I'm hearing it from all of my peers in the industry as well. It's quite amazing when you think of ChatGPT launching in November of 22, and now it's eclipsed I think 1 billion users is the last I heard in just 7 months. But beyond the hype that we've heard with ChatGPT, it's put a spotlight, I think, on AI in general. And I think, the advent of large language models, and, we've been talking about NLP, natural language processing, for a while, and, what that can do to drive efficiency. But, now large language models are capable of generating synthetic content. I think it seems like something out of a science fiction novel, but it's now real. So whether that's natural language chat that we're thinking about, in our call centers, even as we think about, development, low code, no code, and the impact that, that's going to have on programming, and also product designs. But, it's really enabled, I think in many ways, we're all on this journey around cloud and hyperscale cloud computing. And we've just seen significant advances in AI over the last 5 years. And, The reality is, none of us want to be left behind. We can make our own decisions, whether it's hype or whether it's real, but it's definitely on everyone's agenda. The other piece I would just throw in that we haven't talked about is cybersecurity. I think that's an overall priority, especially given that the bad actors are now using large language models and all of these advances to become more sophisticated and dangerous. So they're using the technology, that we're looking to gain advantage in our own industry against us. And in fact, I heard recently that cybercrime alone in the U.S. this year is going to cost $8 trillion. So it's a significant risk and opportunity at the same time.
Right. Well, this is an interesting moment. We can bring Dror Katsav into the conversation too, because they have a special take on AI. Let me ask you real quick before he jumps in, Mike. So you talked about CX, and that's certainly been at the forefront. And AI is all over my desk. We're doing research, and we're into large language models and GAI platforms. I mean, all kinds of things, services coming through. It's happening. The future is now. In the case here, it's happening right. But how do you manage that in the context of operational cost management, the usual risk compliance and regulations? Is it getting more spread out in the organization? Is it centralizing? How do you feel it's happening?
Yeah, I think it's definitely becoming more centralized in regards to key topic areas as it pertains specifically to managing the risk, managing the compliance. I think that the industry is going to need to catch up with technology, to be honest, for us to remain relevant. But the conversation has to shift towards the customer and what's best for the customer. And for us to be relevant, we have to keep up with the Amazons and the others that are creating these new experiences that consumers expect. So it's definitely an interesting kind of broad dilemma that we're all dealing with.
Right. And Dror, you've been listening patiently to this discussion so far. I think this is a good moment for you to jump in and add your perspective. I think it's interesting that, compliance always at the front of a lot of insurers' minds for so many years is also like a new frontier, a challenge too. Does that fit in with some of the things you're doing at Edidot?
Yeah, so before I'll touch what we do from an Edidot perspective, I think two major things have changed recently. One is the market environment have changed dramatically in the last year. Interest rate went up, the market shifted. So things that used to be solvable by bringing more customers in are now less solvable. So carriers need to kind of look into themselves and say where I can improve from an efficiency perspective, where can I improve from a customer engagement perspective, where can I improve from a lifetime value perspective, because the economy where capital is cheap is no longer here. So that's one thing. And then the other thing, as everybody mentioned, is AI. So AI is not new. We've been using AI to get recommendations from Netflix and Spotify for 15, 20 years now. AI is helping us navigate to wherever we want to get to. But what happened in the last 2 years, or even the last year, or even less, is with OpenAI and ChatGPT and Midjourney and all of these kind of new tools, it became something everybody understands that's going to change everything. You see it everywhere, and it's become again something everybody talks about. So now you see CEOs talking about how AI would change my business, and should I be using AI, and how should I be using AI, and so on and so forth. And I think one of the challenges we face when we speak to the companies, and one of the opportunities that Edidot has in that perspective, is that if I'm an insurance company and you just asked the question about compliance, I don't see myself taking all my data and throwing it on OpenAI and seeing, to see what happens.
Right.
From a privacy perspective, from a security perspective, from a compliance perspective, from like millions of reasons, I don't see myself doing that. And the benefit a company like Edidot has, so Edidot is a startup company. We started in 2016 out of Israel. We moved to the US in 2019. The focus of the company from the get-go is life insurance. and using AI to understand client lifetime value. And one of the benefits we have is that we've been building this proprietary data set. So the data we have is data that doesn't exist on OpenAI. OpenAI is a super cool product. And if you haven't played with it, go and play with it. It is trained on millions of data points, trillions of data points, none of them insurance related. Companies that have kind of vertical approach and have the insurance specific data and have the insurance specific models have an advantage in building insurance specific use cases. So specifically, how do I better underwrite? How do I better understand who is surrendering or who is lapsing? Who is up for an upsell? What product should I buy? What would be the right coverage for my needs? And so on and so forth. All of these kind of very tailored use cases are very ripe for companies that are kind of vertically focused. And a strong piece of the partnership we have with entities focus specifically on that. How do you take your kind of internal data team and internal data operation and turn this data into premium and make use of this AI to operationalize it and turn it into actions that impact the business quickly?
Yeah, no, right on point in my experience. It's coming at us fairly quick, along with the full context of everything we've been dealing with up to this point. Let's try to turn that priorities into some hard targets, maybe too, for what's going on in insurance organizations. So the next section of this discussion is described as challenges. So what are the actual challenges and obstacles that insurers are facing or are addressing first? Maybe Dror, I'll let you go right back at it in terms of what you're seeing in terms of the way carriers are actually addressing this. What do you see happening up front?
So I'll start with kind of the three big headlines, which is obviously privacy, security, and compliance, where everybody is kind of sensitive about what data goes in, how do I keep it secured, and then how do I make sure that the insights are compliant with the business they want to run. And from that perspective, I mentioned earlier, being a vertical solution helps. The way it helps is that, if you go through the regulation, if you go through the legislation in the different states, you start getting better understanding of what data is actually considered PII and what data is being considered more sensitive than other, and what data should I be using at the different models, and so on and so forth. And then from a compliance perspective or from a bias perspective, there are certain things that insurance companies have felt comfortable with for years. There are, to an extent, differentiation in pricing. We differentiate in pricing based on, age and gender. We differentiate claim experience by different parameters. And one of the challenges insurance companies have with the models is, as the models get better and get more predictive, some of these models are also less explainable. So how do I get to feel comfortable with the result that the model provides me? And do I compensate on predictability, or in order to get better explainability, or the other way around? Do I kind of focus my efforts on understanding the results and make sure it's ethical, it is compliant with my standards, it is fair and equitable, or do I go for the most predictive result that I can get? And you see that different lines of business and different parts of the value chain take different approaches. For underwriting, I may need to have better explainability. For customer service, for the call center, prioritizing calls in the call center, I might go for better predictability to have higher efficiency. And I think specifically the client engagement and the lifetime value is the areas where you'll see most of the development very quickly.
Right. Okay. Great. And Mike, what kind of things are you trying to address up front in terms of those challenges, or do you have a list or a priority list that you're going at first?
Yeah, I would take a little different spin because while
Okay.
AI and ChatGPT really exciting shiny objects to chase right now, most companies are struggling with some of the basics. So I think data governance is such a key, to creating a foundation for any good data program, whether it's, creating associated data ownership roles, policies, procedures, cataloging of data, focusing on data quality, all critical to success and necessary if you're going to get out of, the data silos that we're in today. So I think that's foundational. I think talent is a key challenge that we're all dealing with from a data perspective. If you look across the roles, whether it's data engineering, data science, data visualization, definitely the demand is outstripping the supply when it comes to these skills. So, getting a forward-thinking partnership with your HR departments is absolutely critical to addressing that. And then, from a technology perspective, investing in a data platform is not a simple undertaking. It's expensive. And whether you're pursuing Microsoft's Fabric, Google Cloud Platform, Amazon Redshift, Snowflake, it doesn't matter which platform. It's extremely expensive, but it's absolutely necessary, especially if you're going to liberate data from your legacy applications. The final challenge I would just throw out, and probably the hardest of all, is democratizing data and creating a data culture. And we all know that, changing a culture is probably the biggest challenge of any of them, but one that's absolutely necessary. So you really need a holistic approach to overcome all of those challenges. But if you can, everything that Dror just talked about, can absolutely become a differentiator for your business.
Yeah, I think you really hit the nail on the head there. The talent management has really become a whole new frontier for everybody. We just finished the workforce planning report, and so certainly HCM, but also FP&A. The planning part of the organization has to be really, really tightly involved with that as well. So that's another area just to throw on top of the pile we're building here today. Okay, well, let's step aside for just a second and talk about maybe give us a little broader context. I know, Dror was already talking about recommendation engines and things like that, but the art of the possible. So can you think of, work dynamic situations in insurance or across other industries that use data to deliver exceptional, like personalized, customer experiences? Are there models, Mike, that we might draw on?
Yeah, if I have to step outside the industry and look at who's doing it extremely well, I would point directly to social media. No one does it really better than social media. I think TikTok, Facebook, Twitter, they've acquired massive amounts of data and they use it to drive highly personalized asynchronous experiences. And I think they're getting better at monetizing their data through advertising, which I think is a model that other industries will be following. But they're definitely masters at coupling their own interaction data with second-party advertiser data, third-party data enrichment to influence customer behavior. What I find to be really interesting, when I look at social media, is how they're driving engagement, and they're doing it at scale. So, Facebook, 3 billion active global users, 70% of US adults actively using Facebook today. Instagram, I think, is at 2 billion active users now. Their engagement rates are 4 times that of Facebook. So, they're using data more effectively. But I think TikTok is really winning the game. The average TikTok user opens the app 8 times a day, and close to 80%, I think more than 80%, have actually posted a video. So engagement rates through the roof. But as I look at that, and I look at that as a corollary to insurance, I do think that consumer behavior is going to push us towards similar types of engagement. I heard a statistic recently, I think 70% of insurance customers are expecting, what they're calling kind of hyper-personalized service and recommendations. So, we've got to be willing to invest and meet our customers, not only where they're at today, but where they're going. The other thing I would just throw out quickly is beyond social media. I think Amazon's use of data to drive personalized shopping is still very, very relevant. And no one has really achieved the speed and simplicity of the shopping cart experience at Amazon. And I think our customers are also wanting this same speed and simplicity, but it's challenging when we're selling complex and regulated products. However, if we don't aspire to an Amazon-like experience, I think we're going to be disrupted.
Right, right. Dror, the social and shopping, those things, they're familiar, but they don't seem to be wrong in any sense. Do you have anything to follow up from your perspective on sort of the art of the possible in terms of paradigms?
I'll actually go to the other extreme. I think, we talk about, TikTok and social media and all that. And I think there are some experiences that I would want to do with my insurance where I want to do it without speaking to anybody. And even that is not, available today. So just to give an example, a strong focus for us is retention. And from a retention perspective, let's take two extreme cases. One extreme case is I'm about to see a big, premium payment invoice that I need to pay, and I can't afford to pay it because of the current economy. And I want to break it into quarterly payment or monthly payments. This is something that, if you want to push a payment on your credit card, you do it on an app in the middle of the night in like 6 clicks without talking to anybody. But if you want to turn your annual payment of premium into monthly payment, it's 3 documents, an agent, and hopefully in most cases not using a fax machine. So, there is such a big difference here between where the experience could be, even on banking, to where it is today for insurance. And let's take another extreme. Say that I'm going to surrender or may not be able to retain my policy because I'm not happy with the investment profile. I'm not happy with the guarantees and so on and so forth. Making these investment decisions on a Fidelity app, I also do in like 3 clicks. And this is, again, something that is crazy hard for me to do with an insurance company, today. Getting in front of the advisor, getting in front of getting the right advice at the right point in time. So I think I completely agree that the companies that do it best today are some of the online companies. But I think we have a long way to go as an industry to get there. But some of the incremental steps on the way there, such as improving that engagement, turning some of the things that could be done automatically, self-served, digitally enabled, and so on and so forth, would get us a long way towards that kind of future.
Right, exactly. So, okay, well, let's try to itemize that a little bit too, or strategize a little bit here too. If we step back and look at the carrier industry and what's going on in insurance, are there strategies, or what strategies can insurers implement to keep pace with those priorities we talked about, based on customer expectations and experience and so forth? Is there a framework or a strategy we can apply to this drawer as we approach it?
So I think there's a lot of vendors out there, such as NTT, that can help carriers get the best of breed of different technology solutions and bring them into the stack. And in kind of the traditional approach of building everything in-house doesn't work the same way for data and AI, because in-house you only have the data you have. And out of the house, with partners like ourselves, as well as NTT, you get exposure to a much larger data ocean that you could use for the models. Not because you can access this data, because you might not be able to access this data, but indirectly you benefit from us and NTT having access to this data, and so on. So I think changing the paradigm on how you partner with different vendors and how do you get the best of breed implemented into the stack is going to be very important.
Right, exactly. And of course, following the industry for a long time, it's less so now, but insurers were never known as the most likely developer shops among vertical industries. And certainly the ecosystem has shifted. This Mercedes, what's the view at NTT about strategy?
Well, I like to think in threes because I think people can remember three. So I have three key things. I think the key now is acceleration, and really to do that is creating the right ecosystem of partners. And from an insurance perspective, when I
Yeah.
say that, it's not just solutions. It's really, I truly believe that creating an ecosystem to be able to retain that customer is also making sure that you are providing kind of peripheral products and services and offerings, right? We're bleeding into life insurance to health, wealth creation and those things. So I think building and being, what Mike said is something very important, because that's easier said than done, because there is a big first step, which is really the overall modernization or rationalization of a lot of the legacy environments that exist. But creating that ecosystem is key, where you're able to accelerate by bringing in partners that can move you faster, right? And really retain those things that are core to your strategy and what you're bringing to the market, right? You don't have to be you cannot be anymore in the age of acceleration and consider yourself that you're going to be the best at everything that you do. So that's number one, creating that ecosystem. Number two for me is the other point is figuring out how to truly leverage the data in a way that is proactive versus reactive. That again creates an immediate first strategy and step, which is creating that repository of data, being able to see how you're going to rationalize all the fragmented data that exists in the insurance company. And this is not just 10 different pass engines or 5 different pass engines. This is process data that exists in Excel spreadsheets and independent databases, claims being separate from a lot of different things. I mean, I see it in every day in managing over 30 different insurance companies in our TPA. Getting that data governance to me is a top priority, to be able to then truly leverage that data and turn it proactive into that. And these are not in order. I'm just picking a top three. I mean, they go in different priorities, but really making sure that that customer experience, and going back to the last question, I always use Amazon as one of my favorites, right? Why? Because they make it easy for me to do business with them. They educate me proactively. I know exactly where anything that I do is. They actually proactively communicate with me on the status of things. So I think the top priority is how insurance companies can become that digital agent that truly serves as an advisor, as an acceleration. And I think all these things together also lead to the key right now, which is really optimization of costs, which really comes from process automation. So I think it's an exciting time, but those, from my perspective, are my top three.
Well, yeah, I guess if you got to boil it down to three, that's a pretty good list. Thank you. It's really hard to encapsulate. There's so many dynamics going on here. We have one more topical section to discuss before we get to Q&A, and I want to remind everybody out there that you're welcome. Use this opportunity to lob us questions. We're going to do a couple at the end, but anything we don't get to, we'll be happy to follow up with you. And one is a reminder, we're going to be providing you with a recording of this session too, as soon as we have that available. So, okay, we have laid a lot of groundwork today. We've asked a lot of questions and tried to prioritize and strategize. And so let's try to look ahead. It seems harder from my perspective to do that than ever. I used to be pretty dependably able to tell people that, whatever we were saying is on the front of everybody's minds right now will be happening in 5 to 10 years for real. I think that's moving forward. As some of our panelists have already indicated today, some of the things happening in AI and generative AI are really, they're here now. So what do you think the future of the insurance industry might look like in 5 years based on, things we talked about today? Mike, are you planning on things coming into play now, or thinking about deploying things, or what's your point of view?
Yeah, I think predicting the future is like almost impossible. I mean, a year ago, everyone was talking about the metaverse, and now we're talking about generative AI and ChatGPT.
Right.
So who knows what it's going to look like. But if I had to look forward 5 years, I think the industry is going to evolve into more of a data-driven ecosystem. I think insurance is going to be heavily driven by AI and AI models and personalization at an individual customer level. I think APIs are going to become even more critical to create connected experiences across companies in the ecosystem. I do think agents and advisors will plug in to data and insights, and they'll still be very relevant in the future, although many consumers, I think, will begin to purchase products directly, whether from an insurance company or from an open marketplace. I do think that some sectors of insurance are going to shift to covering risk in real time. I think behavioral and real-time data is going to enable tailored coverage and pricing. But if I step back and look at where I think we'll end up, I think insurers are going to shift away from a product focus to be more customer-centric, really focus on a full CX model where the focus is really around improving the quality of a policyholder's life, cultivating safety, providing ways to improve health and increase longevity, but doing so through lifestyle partnerships as part of a broader ecosystem. I think it's going to be interesting to see how it all plays out, but I think that's where we're going to be heading.
Okay, well, I'm going to throw it to Mercedes next and let Dror finish off our last topical area. Mercedes, what about the future of the insurance industry, if you dare weigh in there?
I foresee a future where we make the complex simple. And what I say by that is being able to truly create that simplicity of experience with the policyholder. And I'll tell you, I think at some point I heard, and this was LIMRA, or that says there's probably $3 trillion of uninsured dollars out there in the industry. And as I get engaged with my kid and his friends and stuff like that, I foresee that, their patience is really low. So I really foresee that, if I really look at a future vision, is the ability or insurance companies creating marketplaces where the consumer is able to navigate that marketplace for their wealth creation, risk protection, and health, right? And that really happens because if we really build a true ecosystem and the data-driven enterprise, we would be able to connect the dots and facilitate that customer. A question that I always ask is, who owns the customer? And it's interesting to see that some insurance companies today who have different lines of business, P&C and reinsurers, or who are acquirers and have acquired multiple insurance companies, today, there are some companies that really don't understand or have all that data of their customer, and therefore the customer that calls into this call line, they don't realize that they have an opportunity because they can actually deliver other product and services. And more from the perspective of really doing it from the perspective of doing the good that this industry does for the end consumer. So by saying my vision is to see that the industry becomes simpler to navigate, simpler to interact with, easier to purchase from, turning the complex into simple. There's a lot packed in there, right? How you get there is really the challenge, but that's my vision for the future of insurance.
I love that. I'd sign up for simple versus more complex any day, because we've been seeing keep going in the opposite direction. Dror, you get the last word on the future of insurance industry, where you see it right now.
So a couple of things. One is insurance was always about having data advantage and technological advantage to be able to calculate risk and therefore build the products, even since the life tables. So I think now we just have new tools that the industry have to find a way to use in order to maintain this advantage. The new data, the new AI models, and new capabilities, we just need to find a way to use it. And the other thing with regards to Mercedes' comment about Amazon, there's a famous quote about from Jeff Bezos, where he was asked what's the biggest competitor for Amazon, and he said the time between you make the decision to purchase and the app popping up on your phone. That 3 seconds where you could change your mind and end up not buying. And we're at an industry where between the point in which you think about, I should have life insurance, I should rethink my retirement, I should look at my long-term care needs, and the point you make a decision, is like 60 days apart. So we definitely have a long way to bridge there between the point you make the decision and the point you can make this action. And both trends correlate. You can shorten this time cycle dramatically by having better data, better automation, better processes, and smarter models that make some of the decisions along the way.
Excellent. Excellent. Okay. Well, that covers a lot of ground right there. We're going to take a couple of questions and remind everybody that you're welcome to lob your questions in. And again, anything we don't get to today, we'll follow up, but we're going to get everybody out on time. So we're not going to belabor this too long. I have a good question here. We're never going to lose the traditional measurements of retention and churn and lifetime customer value in this industry. But do you think, based on what we've said today, I'll make this a jump ball, whoever wants to chime in first, are there other ways or newer ways we want to be measuring things? And in the context of this ecosystem, on things like TCO, anything pop into your heads regarding the way we measure the success of all these things we're trying to do?
I mean, I'll jump in. I think that we need to measure the customer experience. Ultimately, if you're going to create sticky relationships, you've got to create an experience. And I think Mercedes, he said it so well. You've got to make it simple, and it has to be simple, but it also has to be top of mind. There's a reason people buy Domino's pizza. It's not because they have the best pizza. It's because they have the best experience in ordering, and you can track the pizza from the oven to your door, and it's going to be consistent. And I think that if we can't measure and create an experience that is measurable, that we can create that consistency and transparency, I think our industry is absolutely going to be disrupted.
Right. Dror, what do you think?
I think at the end of the day, it has to be about customer lifetime value. Many of the companies today measure things, even when they think about customer value, they think about it on a very product-centric way. This policy that you bought, how much marketing costs, how much commission we paid, and so on and so forth. And in that perspective, you lose a lot of the potential upside of the customer relationship. That online term policy that I bought might not be very profitable. But if I provide very good experience, you're going to purchase another 8 policies throughout your lifetime. If I provide good experience, many of those 8 policies would be with me. And some of these policies are going to be way more profitable because some of them are going to be cash flow products, such as whole life or universal life. Some of them might be disability or retirement products or annuities or asset management products and so on and so forth. But if I don't have that perspective, and if I keep the data in silos and I look at this from the product view, then you're another term customer that might not have stayed long enough to make the commission worthwhile. So changing the perspective from the product perspective to the customer perspective would change a lot of the dynamics in the industry, in my view.
Excellent. That's a great way of talking about the balancing of priorities between lifetime customer value versus upfront revenue. Very thoughtful conversation. And Mercedes, obviously contact centers are rethinking the way they think about engagement time, where they used to try to shrink it, and now they want more of it. So I don't know if you have any thoughts in this area.
Well, it's an interesting question, because I think the challenge for the industry is that, and I'll use myself as an example because I think about these things, right? Who truly does the insurance company need to engage to increase that ROI and that stickiness of the customer, right? I bought a term policy and I've never talked to my insurance company. I never called them. They just draft my premium and I have no need to, but nobody has proactively reached out to me and my life has completely changed. So I think that we need to be careful because customer experience in the insurance industry means something different in the extent that we need to start being more proactive in engaging that customer versus, a good contact center experience. I may have called once in 20 years at an insurance company. So what? I don't even remember what they did. But I
Right.
also, they've never reached out. So I think creating that experience, creating that stickiness is going to be important versus, the regular policyholder may call the insurance company maybe once or twice, maybe 3 times a year max, except for that time where unfortunately the reality becomes true of the loss of that someone, right? And then empathy has to be a big part of what we do in the industry.
Mm-hmm.
I feel a little
Mm-hmm.
bit, and I'm just thinking about this. And Mike, I'm sure I'm going to add a question to a question here, but I'm thinking is truly the stickiness that truly life insurance companies should be figuring out in the ROI is the stickiness of that agent, especially with independent distribution forces, and how much recurring business that agent is bringing me, and how much more they grow the portfolio of those customers because they can take that business away from me. So it's an interesting thing to think about because I believe that the way I interact with Amazon, which I'm probably sad to say they're 2-3 times, more often, is not the same way I interact with my insurance company. So Mike, interested in your thought on that one.
Yeah, I think stickiness and customer loyalty is key to the future. If you look at many of the products, in particular in life insurance, specifically whole life insurance, you're not going to receive profitability on that policy for many years. And you're looking at typically a 20-30 year type of relationship that are built into many of the models that you're looking for. Back in the day when you were just dealing with a life insurance agent and they were somebody that was in your community that you knew, the loyalty and stickiness was based on a personal relationship. Now it's based on an experience that is measured in minutes and seconds. And consumers can become very finicky. So I think that it's critical to create an experience that allows you to price your product in a way that you can be profitable, but also do something that creates lifetime value, to Dror's point, and measure in really the effect of how you enable that person to benefit beyond the policy proceeds.
Right. Excellent. Okay. Well, we're running out of time. And just because AI is at the front of everything, I'm, at least on my desk, I'm going to throw one last real quick question to Dror here and say, do you think that a lot of these AI things are really going to go production, soon as a sandbox? Where do you think things are heading in? Are you going to give me a 6-month window on this?
I think, some companies that we work with, it's in production already.
Okay.
And for the others, what we saw in the last 6 months, also from insurance companies, is that it moved from, an AI experiment in the basement to something the board is asking about. So if it's not in production already, many of the companies would have it in production relatively soon.
Right. Okay. And some interesting consequences perhaps to follow. It's going to be an interesting journey for all the things we talked about. So we're going to have to wrap it up there. Unless anybody leaps in right now, I'm going to call it a close here and thank our panelists and everybody for joining us for our session today on Data at the Core, Empowering Insurers. It was a really great discussion. Thanks to Mercedes Concepcion Gray, Industry Chief Strategy and Transformation Leader for NTT Data Services Global Insurance Digital Platform, going too fast. Dror Katsov, who is the co-founder and CEO of Atidot, A-T-I-D-O-T, if you want to look him up, and Michael Hicks, CIO at Jackson Financial. I want to thank our audience for staying with us and for all your questions. And so for Digital Insurance, I'm Jim Erickson. Thanks to NTT Data for sponsoring this event today. And with that, I'm going to say so long, everybody, and have a great week.
Thank you.